Listen to this episode if you want an inside scoop from a bookkeeper on how to better manage your money in your business. Today, we are joined by Elle. Elle is the founder of Southeast Bookkeeping and Tax. She is our go-to finance gal. She believes that profit fuels freedom and helping business owners build a business that supports the lifestyle they actually want. With years of experience in accounting and tax strategy, she loves turning finance into clarity, confidence, and freedom for fellow business owners. Let's dive on in. Elle, thanks so much for being here.
Thanks for having me.
I feel like the finance, accounting, all of that world in business is one that is not talked about enough. I think it's not talked about enough as female business owners. And so I'm excited to kind of just dive into numbers. I'm a big numbers gal, but I know many of my audience and my listeners are not. They're like, Maddie, don't make me think about it, please. And so first things first, to kind of kick it off, what do you feel like are the biggest kind of misconceptions around finance as a business owner? Like if you could kind of debunk people's feelings, what are some of those things you would debunk?
Yeah, I feel like there's definitely a lot. I feel like there's a lot of feelings associated with finance, and it kind of goes into these two buckets. I notice a lot of either avoidance of like, I just can't even deal with that because I'm so busy with everything else, or there are some money mindset type things blocking. And then I would say the other bucket is really not having a deep understanding of how to make your numbers work for you, and kind of having an emotional association of like, my worth as a person is tied to how much profit or how much revenue my business is generating. And so I think that a lot of those do go back to the mindset aspect of it, but with having clarity and with having a really solid foundation of understanding your numbers and being able to use them as a tool in your business instead of something to avoid or be scared of or to have feelings attached to, kind of cutting that cord with the feelings creates so much freedom to be able to actually make really data-driven decisions for your business.
Yeah, I totally agree. I'm a big data gal. I do feel like my clients oftentimes almost avoid looking at their numbers because it can kind of call them out. They're like, it's none of my business, I promise. Like, I don't even want to dive into that in like not understanding what it might be, what it might mean that they have to change. You know, people are like, I don't know, money goes in, money comes out. What do you feel like are kind of the first steps to get people past that? Like, is that mindset? Is that just like, hey, you know, starting to have somebody help you really understand it? What does that kind of look like?
I think once you actually get a deep understanding of what your numbers can do for you and what they really mean for your business is when those mindset shifts do start to happen. And I think the root of it oftentimes is thinking that because you are really good at this thing in your business or really good at providing this service, really good at creating this product, that you should just inherently know all of these things when it comes to your numbers. And you aren't born knowing finance. You aren't born knowing accounting. You aren't born knowing how to decode your P&L and go, okay, what does this actually mean in the business? And I think that there is just some associations of like, well, this is my business, I should know. And we're just not born knowing that. And I feel like that's where a lot of breakthroughs really start to happen, is actually having like personal face-to-face meetings, chatting through the numbers and kind of like, again, taking the feelings out, but also not having any like shame around not knowing something, and just making the connection of like, this is actually really beneficial, whether your P&L is positive, negative, whatever it is. It's like, this tells us something, and now we can make decisions based off of it.
Totally. And I think a lot of people kind of start off with it kind of just like on the side, but they're like, oh, like I'm bringing in a little bit of money, and then it kind of just keeps building. So in the beginning, it doesn't feel like you need to start like everything is legit. And then all of a sudden you're like, oh, maybe I should separate some of this. And, you know, maybe I shouldn't take in like income on Venmo and some of these other pieces. that there's a little bit of a gray area that if people kind of started where they're like, all right, I'm going to have a bank account, I'm going to have some of these other pieces right away, they can even just see, okay, well, where I see a lot of people make mistakes is they're using their business money for groceries and for utilities and all of this. I'm like, whoa. You don't even know what your actual expenses are because the water is so muddy.
Yeah, that's exactly right. I think the biggest first step for early stage entrepreneurs is having that separate bank account. And, if you need to pay yourself from your business, starting out, everybody should. I'm a big fan of like taking care of the owner first. So that's kind of like a whole separate bucket. But
no, I have that to chat about. How do you know when you're ready to pay yourself? Or do you feel like you should pay yourself from the beginning?
I am a big advocate of paying yourself from the beginning. I think that we as business owners are conditioned to kind of just like think that our time isn't necessarily worth a dollar amount because, if we just do it all and are able to keep everything flowing and not necessarily track our time, like it doesn't count for your business. And that's just, in my opinion, the quickest way to burn out and to kind of have a resentment towards your business because you are doing all of these things. And if you are then not being compensated in your own personal life and your personal needs aren't being taken care of because you're just pushing everything into the business. And it's so easy to do when you aren't paying yourself, when you don't have a strategy for that separation of business and personal, because it's like, okay, if the business funds are running out, then you do have to put personal funds in there. And then you're able to track, okay, here's how much me as the person I put into this. Then you can start going, okay, what is our long-term plan and how do I repay myself for that? And I think that's something early on that's just missed and overlooked. And we as founders so easily just don't tag a dollar amount to our time.
No, especially in the beginning, because you're like, oh, I'm having so much fun with it. You're like, I'm just gritty. I'm having so much fun. Like, this is for me. Like, it's fine. And then all of a sudden you're like, all right, I'm working like 60 hours and like, I need a little something for myself. And I tell my clients this too, is like, I don't care what you're paying yourself, but even if it's enough to put into a fund to put your family on a vacation once a year, like just pay yourself something that you feel like you're getting something out of it. Otherwise, you're so right that all of a sudden you get frustrated with your business. You're like, oh my gosh, like this isn't even doing anything for my life. I'm frustrated with it. I'm stuck. I'm like not even making any money. I totally agree with that. Something that I've heard you say before is talking about the profit first model. The book Profit First, if the listeners don't know, is like a classic finance kind of business finance book, but it's a controversial one among your world. What are your thoughts on that as a profit first? And maybe just give a little bit of like a recap of what the model might be.
Yeah. So the profit first method is essentially you have all of these different buckets, which are actually different bank accounts. And I like to refer to them as envelopes or bank accounts or whatever, but you are essentially, money comes into the business and then you're distributing that between all these different accounts. And it's like, okay, we're going to take 20% of profit off the top. And then that goes into the profit account. And then we are going to allocate 20% for our expenses. And we're going to put 20% in the expense account. And then that way we don't spend any more than what's in the expense account. And then there's all these different accounts too. There's savings, there's taxes, there's all this stuff. And like, yes, saving for taxes is important. Having that planning, all of that is really important. But I think where the mark really gets missed with Profit First is that you're not intentionally planning for your profit. You're going, okay, here's just what we got. We're going to take 20% off the top because that's our profit. And oh no, we have all these expenses. Well, where are you going to pull from? You're always going to pull from the profit account.
Profit. Yeah.
Always. So the system inherently is broken unless you are already a profitable business. In that, once you are profitable, if you are overspending in certain areas, you should be able to have a financial partner who can work with you on what your needs are and building it back into your pricing rather than just saying we're overspending or pointing the finger of like, well, our expenses are too high. Because there's really only two ways to go in business. You either spend less or you make more. And I truly believe that every business owner knows what they should be spending their business money on and isn't overspending in areas that aren't necessary. And I think that it takes that decision making and autonomy away from the business owner to go, okay, well, here's my budget. Here's all I can spend for this. Well, what if it's not enough because your pricing isn't built to actually be profitable?
Oh gosh, the pricing world is one that I love because I chat. Oh my gosh, my clients, I have found so many people that they come to me and they're losing money on every single sale that they have just because their pricing model isn't figured out. And you're very right. And oftentimes when people come to me and they're like, hey, Maddie, I have sales and my sales are increasing, but like I still don't have any money to prove for it. It's the first place that we go is looking back at your pricing. When you're looking at your business as a whole, where do you feel like are like the buckets that you need to look at and prioritize to make sure that you have financial sustainability, like pricing, expenses?
Yeah, I truly believe that pricing is really the number one issue with a lot of my clients. And especially when you're in a product-based business or, I work with a lot of like inventory heavy businesses as well. And with that, a lot of times what they're doing, like a coffee shop, for example, or a retail store, or somebody who's selling a product is kind of looking around at their competitors going, okay, well, here's what they charge. Here's what we should charge.
Yeah.
And at the end of the day, you don't know their finances. You don't know if they're making money. You don't know if, they have an investment group. You don't know if they have a deal on the property because it's, their cousin's place and they don't have to pay rent or whatever it is. You don't know their financial situation. And oftentimes owners will be comparing and going, well, they charge this. I'm like, but how do you know? How do you know they're even making money? Or how do you know that they don't have 4 investors in on all of this and everybody knows they're not going to pull from the profits for the first 5 years? Or
totally,
there's so many different things that we're constantly comparing our businesses to others, but we have no idea what behind the scenes really looks like. So that's where pricing is so important because you have to price for your product or service to be profitable in order to be able to continue delivering it in the first place.
Yeah. Yeah. What is like a margin that you're looking for like a health of a business, or is it kind of different based on industry?
Yeah, I would say different industries definitely have different margins. Somewhere that's really volume heavy, we're going to want to see at least a 20 to 30% profit margin as healthy.
Yeah, overall.
Yeah. And I think that's, a pretty good ballpark and probably even lower than what most business owners think that it should be. I think starting out, everybody thinks like, we're doing this, so we should be making money. But a big part of it is the heavy investments early on. And there is a lot of learning. There's a lot of time. There's a lot of just, again, like not necessarily financial investments to always consider that will impact your profit margins early on.
Yeah.
And then once you do start to get bigger, once you do start to pay yourself, I would say a 30% profit margin is really sustainable. But I also don't like to just pinpoint one number. Because, there's some that have a 10% profit margin and they have enough volume that they're doing just fine. There's others that have like a 60% profit margin, but the owner is on the edge because they're working 80-hour weeks and haven't hired somebody. So it's kind of interesting how like you can look at a profit margin and be like, okay, I wouldn't say there's one that's good or one that's bad. It's just one that necessarily like works for the business and the goals of the owner within the business as well.
Totally. I agree with that. And I think many people only look at their P&L in like April from the year prior, and it's a little too late to be able to make some of those changes. And then all of a sudden they see their P&L and they're like, holy cow, we worked so hard and we ended with only, that to show for it. I don't know. It's a little bit like triggering to some regard of like, holy cow, like just really pushes it in your face. I've seen it all from the finance side at this point of people coming to me that have a 98% overall profit margin versus people that are making $5 million, but they're only netting 40K a year, all of that. From this side of we have sales, revenue's coming in, it's consistent, but like for some reason, there's a gap hole somewhere that we are running thin on our margins. What is kind of your process to look through there? Like, what would your advice be to analyze your business and kind of say, okay, this is where we identify some of those gaps?
Yeah, I would say the first place that I always look is going to be the cost of goods sold and compare that to the revenue. Yeah. And usually if things were good and then started to not be good, generally what happens is suppliers are raising their prices and the owner hasn't reflected in their own pricing to make up that cost. So I've actually seen that a couple times in some really larger companies who they hadn't raised their prices since 2022. And we dove into their cost of goods sold and did a comparison of year over year. And their suppliers had raised their materials by 32%. And they were doing good. They were running out of profit in 2022. 2023 felt stretchy. In 2024, they were like, what's happening? I'm like, well, let's take a look. And that's, pricing was what happened. Their supplies, they had just eaten that 32% increase and it directly came out of their profits. And all of a sudden they went from a profitable business to losing money in 2024 because they just weren't paying attention to it.
Yeah, I saw that a lot in the last few years just because the whole world is more expensive. And so a lot of people, they just weren't in on all of their invoices and adjusting. They're like, it's marginal, right? And then all of a sudden you look and 30% isn't as marginal as it was. Hey, I'm jumping in here for 30 quick seconds for those of you listening and thinking, all right, but how do I actually apply this to my business? Every week here, I share strategies, case studies, growth mistakes to avoid, but your business growth is nuanced. So your business support has to be nuanced as well. That's why all of my support includes me inside of your business, your ideas, your launches, your content, perfecting what you're already building and uncovering your hidden opportunities to scale. This isn't a cookie cutter course. It's a high level personalized support system to help you optimize your brand, your strategy, and every single person your business touches. If you want my eyes and my brain on your branding, your sales, your marketing, and your overall growth plan, click the link in the show notes to apply. Let's see what we can build together. So if you're looking at cost of goods sold, is there anything else that you look at? Like, we have cost of goods versus revenue. Is there anything else that you would look at there to be analyzing? I know that you said you feel like business owners know kind of how to spend their business's money. On the expenses side, this is something else that I've seen is that sometimes people get a little slap happy with some expenses, not necessarily investments, where it's really just kind of money going out, whether it's, I do think rent can be an investment, but people kind of overspending on rent right away, things like that. How do you really dictate, where I have money to spend? Like people are like, how do I know if I can afford this?
I think the biggest thing that is going to come down to is your overall profit and also the level of risk and belief. So the level of risk that you're willing to take in your business, because I have definitely seen, for example, a product heavy client got their first warehouse this year and took on an additional $4,000 a month in expenses. And they were just at the point of this year was going to be their first profit year. And that's definitely wiped away. However, this owner does have financial support outside of the business, doesn't have a family, no kids, is kind of like, like, let's do it now or never.
Scrappy.
Yep. Yeah. That is a scenario where they're like, I don't care. We're doing this. And our response to that has been, okay, because of this extra expense though, what does that mean for your pricing? How much more are you going to need to charge, or how much more product are you going to need to push in a certain time frame to make up for that expense. Again, if you want to continue providing this product for your customers, you're going to have to be able to pay your bills doing it. So yeah, I would say each business is different when it comes down to like the expense side of it. I, again, am just a huge proponent of like, if you are all in on this is what it's going to take in order to make this work, then instead of saying, okay, let's figure out how to spend less.
Yeah.
We're going to look at, okay, well, how do we charge more? And also where is your threshold where it starts to become too stretchy for your customer base as well.
Yeah, totally. I can see that where it's like, okay, if we want to spend more money, we can also make our pricing a little bit more luxury if our marketing and our branding and everything else can reflect that. And then there's kind of that like elasticity mark that you're like, okay, like we're going to start getting into different territory here. Something you've kind of alluded to a couple of times is that, you know, the first few years are going to be maybe not a profitable year. And I don't think that that is something that is widely talked about, because I have a lot of clients that are like, but Maddie, I've been in business for, you know, this is my second year and I'm still only making a little bit of money, something like that. And that's usually something because there is a lot of investments and expenses to get a business up and running. Where do you really see the average there? Or kind of what's your take on that? It's just like the first few years having to be run a little bit more lean.
Yeah. So I will say I have quite a few clients who this past year, they have hit the 6 to 7 figures in sales and are probably in their third year of profit, but they are also in their first year of paying themselves a full owner salary.
Yeah.
That would reflect the actual amount of work that they put into it during the year. One of those business owners is in year 4. The other is in year 7. I have a couple like really investor heavy clients, you know, multiple investors involved. And those ones, I would say like the 5-year mark is probably when the profits really started rolling in for them. But for a lot of my businesses who have individual owners, it's usually around the year 3 to 5 mark where things aren't feeling as stretchy and start to, which part of it is, you know, some of those early stages could have potentially been a little easier had their pricing reflected the true worth of their product, as well as all of their expenses. And generally that's when clients come to me, is usually year 3 to 5, going, okay, we have been doing all the right things. We've been doing all the data entry. We have our P&L. Like, we know it's important. What does this mean? Like, help us decipher this a little bit more to actually make a difference in the business. And these are our goals. And let's start backwards planning is essentially what we do to help them reach their business goals.
Yeah. And I think that's a good thing to note that, like, we're starting a business and it is very front loaded in those first few years of building before sometimes you can get fully like profitable, legit around it. I also think that's another reason to pay yourself earlier on, is because if you're 7 years in and you're still not like cutting a true profit in business, it's really easy to be like, I'll just pay myself less, or like, I'll just not take a paycheck to allow my business to be more profitable. But again, like, at what expense of yourself? I think that's a really good note to look at. So at that 3 to 5 year range, when people come to you and they're like, hey, how do I do this? What are you looking at? Are you looking at a P&L? Are you looking at the long-term kind of trends? What are you looking at there?
Yeah, I would say, so there's kind of like 2 buckets. So the first one is oftentimes they've kind of gotten over that initial hump of like, okay, that was really hard. They're profitable, and the prior year they got stuck with a really big tax bill because it's like, okay, we made money. This is great. All this stuff. And they just sat on the cash rather than reinvesting it, and are then stuck with a 5-figure tax bill and like, okay, well, that was traumatizing. Let's not do that again. But how do we not do that again? So there's that bucket of like finally reaching profitability, and then taxes become a big issue with it. And then the other bucket is like, we've been doing this and we're still not profitable. What isn't working? And I would say in both cases, what we're really diving into is the P&L on the reaching profitability. Like I said, I do think business owners are very well equipped to be spending money in ways that support their business. However, something that we do, like we always do a deep dive into expenses. Sometimes there's subscriptions in there that are, 5 years old that they don't need. But I would say, again, the biggest area for that one is going to be pricing. Because if something's not working, it's usually pricing.
It makes me so happy because I'm harping on people all the time about their prices. Like, you guys need to look at this. Like, we need to know this info. And so I'm glad to hear that from you because it definitely is a big one. And people just want to be affordable all the time. They're like, oh, I just want to be affordable. It's like my least favorite word because what's affordable to me versus what's affordable to Oprah is a very different affordability. Like, it's like such a relative term that you're just like looking at it with your own money lens of what's actually affordable, which doesn't always have to be the case.
Yeah, definitely. And I think that's where, a lot of the brand positioning and the value of what you're providing, it really comes into play. And I will say oftentimes, like, we are seeing really high level, almost like luxury level type products being sold at Walmart prices just because they want to be the cheapest. And it's like, why? Like, why do you want to be the cheapest?
Oh, I know. It's the bane of my existence at this point. I'm like, no, we need to triple that. What are you talking about? Well, and there's so many things that go behind it where they're trying to, like, they're being like socially responsible, sustainable, like, they're doing all these things that incur higher costs, but they're trying to stay at the like low end of the industry. And it just doesn't happen that way. There's a reason those things are more expensive. There's a reason that you're the most affordable is because those other businesses couldn't cut a profit that way either.
Yeah, no, that's exactly right.
So if somebody's listening to this on the opposite side and being like, holy cow, I have no idea on my numbers at all. Money goes in, money comes out, whatever. Maybe they're not in those 3 to 5 years. They're kind of a little earlier on. What are the first few steps that you would have them go through to start getting more knowledgeable or just like legit with their finances?
Yeah, I would say that first thing is definitely having a separate business bank account. And only business expenses run through it. This is the biggest thing for early stage entrepreneurs is just creating that separation. Because in order for that growth to occur, you have to know what this business entity is operating at, what it's generating, what it's taking, like what the ins and the outs of it are. And when your own personal expenses are constantly mixed in there, it's just about impossible to tell. So that's number one. The second one is going to be actually getting organized with your finances, whether it's QuickBooks Online. We're a big fan of QuickBooks Online because it's just really easy to set up. It is user friendly. However, it can go sideways really quickly if it's not set up correctly. So I am always an advocate for hiring a bookkeeper early on because it's easier to clean up books that have never been touched or that we just need to start from scratch versus undoing things that were done incorrectly. And I think that especially when it comes to like bookkeeping and finances, it's not fun and it's not sexy. And like everybody wants the branding and they want to spend on their marketing. But at the end of the day, your numbers are what are going to tell you like what you can spend on your branding, what you can spend on your marketing, and where you need to make those shifts if you need to be investing more. Also, you are dealing with the IRS at the end of the year once you own a business, which is kind of a big deal. And I do see a lot of early stage entrepreneurs being like, oh, I can just figure this out. We can just wing this. And they come to us going, okay, I thought that I could do this, but I can't. And now I'm actually kind of worried.
You're like, and now it's April 10th and we have 1 week. So how do we do this? Oh, Elle, thank you so much. I feel like finance is a conversation that I could chat about forever. My dad was a financial advisor, is a financial advisor growing up. And so I love talking about the finance and the tax side and all of that. If you were, just because you're an entrepreneur, you're also an entrepreneur with kiddos at home, and I see you with your kiddos all the time, and it's so inspirational. If you were to talk to other female mother founders, what is kind of like your piece of advice as an entrepreneur to them, just in general, that you wish you could scream from the mountaintops?
Yeah, I think the motto that I truly live by is like, I don't have to choose between being a good mom and being a good business owner. There are certain aspects in our life that we set up day to day to make sure that, like, yes, I'm able to take care of the things that I need to take care of, but at the same time, like, the ability to unplug when my kids are home from school has been so important. And I think that's something I wish I could tell myself early on. When I first started my business, was just kind of like trying to do both at the same time and feeling like I was not doing anything great, and setting up our life in a way that allows for a really hard stop, kind of like treating it truly like a job where I clock out of the business and I'm in mom mode. And that to me is so fulfilling, to be able to chunk it for my day of like, hey, this is when I'm working and this is when I'm a mom. And early on, I felt like I had to be doing everything. And then I realized that wasn't sustainable. And I really felt like I had to make a choice. Like, am I going to be a business owner? Am I going to be a good mom? And I finally took away a lot of that pressure and was like, no, I get to be both. I get to do both. And there's a way to do it. And I think that's really important for women in the entrepreneurial space, is we kind of feel like we are just constantly like choosing between career, choosing between motherhood. And I think that there are just beautiful ways to blend it and to make it really sustainable for your life. And
Yeah, I love that, because I totally agree. I don't have kids yet, but they're coming in a couple of years, hopefully, if I'm lucky. But I think going into that, it's a fear that I have, transparently, is just like, how much, and I know my life will change no matter what, but like, how much is it going to change with the business? Because there is this like narrative of choosing one or the other, and it just doesn't have to be that way. And it's always so inspiring to see other business owners like yourself doing it and figuring it out and really making those boundaries and setting those things in place. It's really, really cool. I'll be calling you up in a few years when I'm like, hey, how did you do this? Oh, Elle, thank you so much for being here. This was so wonderful. Where can people find you, follow you on social, whatever that looks like, if they are interested in a bookkeeper or tax strategy?
Yeah, our website is southeast-bookkeeping.com, and you can find me on Instagram. It's Elle Broschat, ELLEBROSCHAT.
Cool. We'll link it below as well. Thank you so much. This was so wonderful.
Thank you.
If you found today's episode helpful and are looking for more tangible ways to grow your business, make sure you are subscribed to the show. If you want to dive deeper into this topic more, click the link in the show notes and join our completely free podcast community, where we dive into every single podcast topic, as well as give some bonus support and free coaching calls. And finally, if you are interested in getting my eyes on your business to find your hidden opportunities to scale, apply to work with me one-on-one in the show notes or on our website. Remember, it's not enough to listen. Don't forget to implement too. I love ya. I'll see you in the next episode.